All right. Good evening, everyone. I know I say it every week. One of these times I'll get the intro music, but just kill a little bit of time here. Not quite seven. There it is. All right. 7 p.m. Eastern. Welcome back to the Sunday Night Live, everyone. As always, I have an agenda, but remember, bring questions. Hit me with questions now, or, if you think of a question anytime during the week, like with anything live, the to me, even though I've got the agenda, I got stuff to talk about, like the biggest benefit of live is, interaction. So definitely hit me with those comments, and I'll answer as many questions as we have time for. Kind of cool. I like this little chat thingy over there on the side. That's kind of neat. StreamYard is what I use, and Bending Spoons. Bending Spoons is a pretty cool company. Hopefully they go public. But Bending Spoons bought StreamYard, and they've added a lot of cool new stuff. I kind of like this little chat window on the side. It makes it easier for me. And then, especially like for the replay, it's kind of neat. I mean, I know a lot of people watch the replay so they can kind of see what comments are, etc. So pretty cool to see that. So anyway, hit me with questions, guys, and let's get going. So first full trading week of the year, pretty slow out there, man. I was expecting, we had the first week was, the holiday shortened week with New Year's and just a lot of people off. I admit, I thought this week was going to be way busier. And overall, the number of plays, the explosive spikes just really weren't there this week. Now, I know a lot of people can tend to panic when these weeks happen. A lot of you have heard me use this. It's a dumb analogy, but when things slow down, I always say the same thing. I'm always like, you have two ways to react. And this is the dumb Alanis Morissette rain on your wedding day analogy. But when things slow down like this, I always say, like, you can get angry, you can get frustrated. Worst thing you can do is overtrade. Or what you can do in weeks like last week is, do the opposite of what most people do. Most people, there aren't any high quality plays. So they just start throwing stuff at the wall and basically trading anything that moves. And when you got a small account, like, that can be really dangerous. I mean, when you got a bigger account, it's one thing. But, when you're really trying to grow a small account, if you're trying to force things in weeks like last week, it can get you a lot of trouble. So I was pretty clear every day in the webinars all week that it was slower out there. And back to the Alanis Morissette analogy, my point is, it's like rain on your wedding day. You can get angry about it. You can get frustrated about it. You can overtrade. You can try and create opportunities that aren't there. Or you can simply recognize that for whatever reason, it's a little bit slower out there. Again, 99% of you are new traders and 99% of you probably have small accounts. It's just a reality. That's why you're on, I appreciate you being here, but it's just the reality. And when you got a small account, when you're new, weeks like last week can get really dangerous because you really get chopped up and just take a lot of unnecessary losses. So the point is that, if you come in tomorrow and you're running your scans and it looks a lot like last week, that might be a sign that, what, I'm just going to calm down. Maybe I'm going to take the day off, come back the next day. Now, a lot of people ask, what will change that? This is how it happens every time. is things slow down like this, and then there's all it takes. Some of you have heard me say, all it takes is one. All it takes is one. And when I say that, what I mean is once we get some 1 million float, $3-4 stock that gaps up on news, shorts pile in, and then it explodes, 300-400%. All of a sudden, they're going to start popping up everywhere. Okay. So a lot of people ask, okay, like, Tim, I got a small account. I'm new. How do I know when it's time to come back? There's your answer. Now, you don't need to nail the first one. Okay. What you're looking for when it comes time to come back and get more aggressive is exactly that. And you can do it at the end of the day. I mean, you can come back at the end of the day, and if there's some 400% low float runner, that's your cue. Okay, I'm going to be looking to get back in the game tomorrow. Now, a lot of people don't like that answer because they're like, well, I would have missed that one. It's just one, it's just one trade, and it saves you from sitting around all day long trying to force something that simply isn't there. Okay. So don't worry about the first one. Don't worry about the first one. Just wait for it to happen. And when that happens, and it might be tomorrow, hopefully, listen, I hope it's tomorrow. But when that happens, then it's time to be like, okay, here we go. So markets digested a lot of the talk. The Fed right now sounds like the Fed is going to stand pat. I think they'll reverse on that. I just think right or wrong, I just think that Trump will continue to pressure them to lower rates. And again, I don't take political stances here. We look for trades related to what the politicians are doing. Okay. I don't, listen, I got my beliefs. I say it almost every week. You want to vote for your dog? Vote for your dog. It's a free country. I ain't going to tell you what to vote for or what to think. That's not what I'm here for. Okay. So I'm not passing any judgments. But the point is that Trump's just going to keep hammering them. And I think, and they're supposed to be independent, but, we'll see. So anyway, the point is there was a lot of that talk of just no further rate cuts. And I think the market kind of didn't like that. Now, the good news is, we broke out to all-time highs on Friday. But earlier in the week, it was just sideways chop in both the NASDAQ and the S&P. Just nonstop chop all through the week. Things woke up a little bit on Friday. We did close at the highs, but earlier in the week was pretty slow. Now, AI leaders, a lot of you guys know, I think 2026 is going to be a huge year for AI swing trades. Google, hopefully all of you guys got the weekly watch list. Let me get you the link. StocksToTrade watch list. Whoops. Yeah, there we go. Hopefully you guys all got the watch list. Google is on there. I know I've talked about Google for months and months and months as my favorite AI swing trade. High priced. You can trade options though. Okay. Every time I bring up one of these, higher priced ideas like Micron, love Micron, loved it going back weeks ago. People get a little ornery and they're like, hey, it's $300, but it's trade options, man. If you got small, like one thing that, now make sure you know what you're doing. Okay. I'm not saying just start trading options tomorrow. Okay. I'm not saying that. Make sure you study, make sure you understand. But it does kind of frustrate me when people with smaller accounts just are like, oh, I can't trade Google. I can't trade Tesla. I can't trade. Yeah, you can. Now you got to get educated. But that's no different than any trading. If you just dive in with no understanding of chart patterns or fundamental analysis or technical, you can get in just as much trouble just buying and selling stocks if you don't know what you're doing. Now, I do my best to help with that. I show up every day to help you learn that stuff. Now, I want to be careful. I'm not saying just jump into options with no clue of what you're doing. But it kind of aggravates me on times when people are like, I can't trade Micron, I can't trade Tesla, I can't trade Google. Yeah, you can. Yeah, you can. You just got to get educated, and that's no different than anything. So anyway, Google, I just love it because I really think that they are, they're really monetizing AI. Like they're making a lot of money on it. Obviously, a lot of the startups are money losing companies. I mean, that's just the nature of being a startup. You start out in a new industry, a new company, you're going to lose money, especially in technology. I mean, technology, biotechs, et cetera, these are very front loaded businesses. Whether you're a biotech or a technology company, you got to spend a lot of money up front. Like with a biotech, you're going to do R&D for years and then release and then go through the FDA approval process, which costs a boatload of money, takes years and years. But then, if you got the next blockbuster drug, you make back all that money and then some. Technology, very similar. You're investing in the infrastructure, the back end, the programming. It's very front end loaded. So you're obviously going to, lose money for a while. But what's great about Google is I think that they are, the best current money-making AI play out there. So anyway, it's the feature stock on the weekly watch list this week. Listen, a lot of people were calling it cheap versus the peers back in the early part of the year. It's been on a heck of a tear. I've been bringing that one. I've been telling people buy Google for 6 months now. Gemini, the new version of Gemini, very solid. They've got AI integrated search, cloud. The Google Cloud is a big growth factor for them as well. And, and I go back to, I think that one of the first times I recommended Google as a swing trade, and like later that week, Warren Buffett. I mean, Warren Buffett, now I know he's retired now, but he bought a bunch of Google at $300 a share. And I mean, a lot of you guys have, this is just a repeat from a few months ago, but, Warren typically avoids technology stocks and, et cetera, outside of Apple. But, Apple really isn't, as much as I love Apple, they haven't done anything innovative basically since Steve Jobs died. But anyway, so that being said, Berkshire Hathaway's in, and, I still love it as a trade. So, so how to trade it? I mean, close strong Friday, week open red to greens, breakouts, dips to consolidation. So there's really 3 plays to approach Google. In the short term, I like week open red to greens. That's based off the previous day's 4 p.m. close. If it doesn't gap down at any point during the week, love it as a breakout play. I mean, I know a lot of people don't like buying breakouts, but I like the breakout potential on Google. And then also, if you're looking for a longer term type trade, not really like a swing trade, you're going to get a dip at some point. Just set alerts at the consolidation zones. At some point, I mean, stocks can't go up forever. At some point, Google will pull back into a consolidation zone. That's your buy point if you're looking to hold, for months, years, decades, et cetera. Don't buy breakouts if you're trading in long term. Short-term trading, love buying breakouts in strong fundamental and technical stocks like Google because you're looking for that quick trade. You're basically joining the trend of all the breakout buyers piling in. That's the short-term trade. Long-term trade, just wait for dips back to consolidation. I mean, at some point it's going to pull back. Don't chase breakouts for long-term trades. Wait for the stock to come back to you. So, again, kind of been a pretty slow month so far, but I think that's going to change. I think we'll see. I think and write this down. We'll come back a week from now and I'll have a completely different review of the prior week. Like, I think that as slow as this week was, I expect next week I'll be on here Sunday night and be like, holy crap, it's back. Now, again, I can't guarantee anything. We play the cards we're dealt. We trade what we're presented with. But I think things are going to start heating up this week. And I think overall, the month of January will be pretty hot, even with those 2 weeks pretty slow. Let me look for some questions here. I fell behind. Thank you, Life in the Green. I appreciate that. I enjoy these. Like, a lot of you guys know, I do a lot of, trading coaching webinars, like during the market day. I do a lot of them where we're live trading, real-time price action, etc. These are kind of fun because they're just more chill. It's like, obviously nothing's trading right now. So I enjoy these. Thank you for the kind comments, Life in the Green. It's nice to be able to, talk trading and be able to relax a little bit and not be like, this one's running and this one's running and trading this stock, trading that, so anyway, thank you for the kind comment. Is the 250 rule around? It is still in a lot of brokers. Not all brokers, but a lot of brokers do enforce you have to put up $2.50 a share of buying power per share if the stock is trading, under $2.50. So like, not all brokers, but a lot of them do. If you're shorting a $1 stock, you have to put up $2.50 of buying power. So that is a big reason why we see a lot of the biggest short squeezes on stocks that are, $2, $3, $4, $5, $6, $7 because of the buying power issue. Remember, a lot of times people say you can't short, like penny stocks. You can. Okay. If you can get a locate, you can short a 1 cent stock, but at many brokers, you want to short that 1 cent stock, you got to put up $2.50 of buying power per share, which makes it, I guess you would say, difficult to do unless you have a really big account. So, yeah, oil prices are going to crater, but this is kind of a funny one, how people get this backwards. So, I was very bullish oil last Sunday night. Now, let me rephrase. I was very bullish the oil and gas companies, the stocks. Now, I understand this happens, but like, I know everyone can't be on every webinar and read every watch list. I understand that. But I have said for over a year that oil prices are going to crater, okay? I think some of you might have been here for the very first YouTube Live. I think we're going on a year. Anyone remember when I started? I want to say it's February, March. Does anybody remember? I remember the very first one, and you can go back and watch it. I said sub $2 gas is coming this year. Now, I was off by a couple days, but there were places that had I saw $2.14 2 weeks ago. Okay. So don't misunderstand being bearish the price of oil. And I think the price of oil is going to continue to fall because of the Venezuela situation, et cetera, Greenland, all this stuff. But I am very bullish the oil and gas companies. People kind of make I read the comments and people are like, I don't know. Like I think sometimes people have a little bit of selective hearing, and everybody's busy. I get it. But I've said for over a year, oil prices are going to tank, but that's going to, basically it's drill, baby, drill. We got all this supply out of Venezuela. I think the oil and gas companies, the stocks, are going to crush. And look at what they've done the last few weeks. I mean, I talked about ExxonMobil, Chevron. I mean, they're all trending up. And that's the disconnect. I think a lot of people thought that oil prices going down would mean that stocks would go down. No, they got cheaper cost of production, So anyway, when it comes to oil, we're going to have, I said it a year ago, sub $2 gas. And there's some places in the country that have that. Now I'm in LA right now. I like how gas is still $5 a gallon here. I took an Uber from the airport and gas is still $5 a gallon. Back home, it's $2, but hey, whatever. Welcome to, California. But anyway, is the day trade regulation still in effect? Yes, but Mr. Scott, good news. Okay. The good news is now we don't know when, but the good news is that it has been decided to lower the minimum capital requirements to, last I saw, now you can go to the FINRA, SEC, okay. Last I saw, it's 2,500. So now this could change. It's regulators, it could change. But as of right now, the good news is that the PDT will still exist, but only for accounts less than $2,500 versus $25,000 now. Now, I'm excited about this. Now, the PDT doesn't apply to me. I don't have to worry about the PDT. But all of you guys know, I mean, how many times have you heard me say, when it comes to the PDT, it's my favorite Ronald Reagan quote, the 9 most dangerous words in the dictionary are, I'm from the government, I'm here to help. The PDT thousands, possibly millions of idiotic pieces of legislation. But outside of volatility halts, I still think volatility halts are the dumbest of all regulations. But a very close second is the PDT. And the biggest reason I hate the PDT, it doesn't apply to me. I don't have to worry about it. So people are like, why do you hate on it? The reason I hate the PDT is it actually does the opposite of what it's intended to do. People bag hold stocks, people hold stocks overnight. How many times have you held a loser overnight because you didn't want to use a day trade, and then that stock gaps down the next day? Actually, I'm curious. Let me scroll through the comments. Any yes or no's? And please be honest. Hey, I'm open and honest. Be open and honest with me. Have you ever, a stock that you knew you should cut? You knew you should cut it, but you're sitting there. You got that last day trade, and you're like, well, man, I don't want to use my last day trade. So you hold it, and then it gaps down 30% the next day. And that's what I hate about the PDT, because so many people do that. They hold losers overnight, which is breaking the cardinal rule of overnight trading. The cardinal rule, write this down, please. Write this one down. When it comes to overnight trades, this is a rule that you should never, ever, ever, ever break. Do me a favor. Write this down and implement it tomorrow. When it comes to overnight trades, you ready? Everybody got their pen and paper ready? Winners hold winners, losers hold losers. Okay? That's the iron law of overnight trades. If you're going to hold trades overnight, They have to be winners. They have to be stocks that are trending up into the close that you're green on, okay? Because the gap continues, the trend continues the next day, okay? So the way we look at overnight trading is a subset of winners hold winners and losers hold losers is the trend tends to continue the next day. I'll say it again. The trend, now not always, but the trend tends to continue the next day. So if you're holding an uptrending stock, you hold it in anticipation of that rule being true. So if it closes strong, there's a good chance it's going to gap the next day to increase your gains. That's the smart way to overnight trade. Now, unfortunately, what I see so many people doing is breaking the iron law of overnight trading, and they're holding losers into the close because they're hoping some news will come out, something will change. Like they're just gambling and hoping that something will change the next day to bail them out. But they are forgetting the iron law of overnight trading, and that is that the trend tends to continue the next day. So if you're holding losers overnight, the odds state all you're doing is increasing your losses because the trend continues the next day. So if you're holding a winner that's trending up, the odds, it's not guaranteed, the odds are that trend continues the next day, you increase your gains. If you're holding a downtrending stock, which you're losing already on, the odds state that that trend is going to continue the next day. The stock is going to gap down, and all you're doing by holding losers overnight is increasing your losses. That's all you're doing. Now, back to the PDT. Unfortunately, a lot of people are also holding losers overnight because they're down to one-day trade or they're out of day trades and they don't want to use it. So anyway, Scott, good news is unless as of right now this can change, as of right now, the PDT is not going away, but the capital requirements are going from 25,000 to 2,500. Now, last point I will make is, so someone asked, I don't have to worry about the PDT because I got way over 25,000 in my trading account. So FYI, guys. So Mark might have misunderstood. And actually, Mark, I'm glad you asked this question. So the PDT applies to anyone with a margin account. Now, that if you have over 25,000 in your trading account, then it doesn't apply to you. But anybody, I don't care if you're Bob Hope, I don't care if you're the Pope, I don't care if you're the President of the United States, if you have a margin account and less than $25,000 in your trading account, the PDT applies to you. So I'm not like, I think maybe, Mark, I'm not like exempt. Yeah, and again, maybe I'm misunderstanding your question, but it's not like I'm exempt. I just have a lot more money in my trading account, so I don't have to worry about it. But it's a good question because, it's very often misunderstood. But you could be the President of the United States with a margin. Remember, the PDT only applies to margin accounts. But if you got $10,000 in your margin account, doesn't matter who you are, you're under the PDT. So, not buying power. Okay, some good questions. No, cash. Timothy, no, cash. Actually, I liked it. I mean, thank God the PDT. I tell you, I want to answer the questions you guys want answered, but man, my brain hurts discussing because the PDT, it's just so stupid. Again, it's so stupid. But hey, I'll answer the question. No, and remember, Timothy, I'm not picking on you. It's just, it's the rule itself is idiotic. And I get why people misunderstand it. But no, not buying power. Cash. You got to have more than 25,000 in cash in a margin account to not be under the PDT. So, yeah, and again, cash accounts. Remember, guys, I tell people every week, if you're new, like, and actually, I got to run. I didn't realize what time it was. Listen, I'll talk wherever the questions take it. I'll go. Listen, when you're new, and I'm assuming most of you guys are new, I just trade with a cash account. Margin as a new trader is it's just a hassle. Like it puts you under the PDT. And if you're brand new, I would beg you not to use margin, and because remember, it's just margin accounts. Now people say, oh, I'll get a margin account, but I won't use the margin. Everyone always ends up using the margin. And if you're brand new, and if you're brand new, it means you're probably struggling. It's just everyone struggles in the beginning. I struggled for 3 to 4 years. 3 to 4 years, I up, down, never made any money for 3 to 4 years. Everyone struggles in the beginning. So to me, why would you want margin if you're struggling? Like it's now, again, I get the allure. Oh, instead of buying 100 shares, I can buy 500 shares, etc. But if you're consistently losing, which everybody does in the beginning, everyone loses in the beginning, all margin is going to do is increase your losses. Like it's the last thing you want. So please, if you're struggling, which I'll say it for the 5th time, we all struggle in the beginning. One of the biggest reasons so many people fail at trading. I truly believe anyone can do this. I truly believe anyone can be a successful trader. It takes a lot of work, and it takes a lot of discipline, takes a lot of pain, takes a lot of hours, takes a lot of studying, okay? But anyone can do those things. You don't need to be naturally wired to trade. You don't need to. Anyone can do this with hard work, discipline, and commitment. But no one succeeds in the beginning. No one just starts trading and crushes it. Now, the bummer for me as someone that mentors people is this is always one of the biggest things I struggle with, is because people want instant success. They want instant gratification. It is the world we live in. Look at debt. People max out credit cards every day because they want the new iPhone today, because they don't want to wait 6 months to save up to get it's just the world we live in. Okay. It ain't our grandpa's world anymore. Grandpa would be like, save your money and then buy the iPhone. The biggest thing that blows up new traders is just people want to go from A to B in like a couple weeks, and it's never been done. You have to learn discipline. You have to learn patterns. No matter how hard you try, you're never going to pack that into a few days or a few weeks. Again, I think some people were making fun of me. Some people were like, it took you 3 to 4 years to get, I love it. I saw a few comments. People are like mocking me for losing money for 3 to 4 years. I openly admit it. Doesn't bother me. I was busy. I had little kids. I had a business. Doesn't bother me. Laugh all you want. But I'll tell you what, the people that are mocking that, they're probably the instant gratification, instant success people. And you think they'll be here 22 years later? Okay. Might have took me 3 to 4 years to get profitable, but you want to know who's still plugging away 22 years later? The guy that lost money for 3 to 4 years. So the ha-has, they'll learn soon enough. They'll learn soon enough. So anyway, guys, speaking of learning and education, I'm doing a weekend workshop this weekend. So would love to have you. Weekend 2-day workshop. So I put that link in chat. I'll actually be at a ski resort. So my daughter wanted to take her college friends skiing. Like, this is how committed I am. Okay. So we're going to be at a ski resort next weekend because remember, the market is closed next Monday. So FYI, next Monday is MLK Day. The market's closed. So because of that, I'm taking my daughter and her college friends to a ski resort because of the long weekend. But I'm still doing a weekend workshop. Would love to have you. You know, I'll show you the slopes in the background. They'll be off skiing, having fun. The lovely Mrs. Bohen will be doing probably shopping, but I'll be back in the hotel room doing the weekend workshop. So if you want to learn more, you know, more than I have time to go over here, would love to have you. Link is in chat. Yeah, I think that's it. So have a great night, everyone. Thank you. Great Q&A tonight. I really enjoyed tonight. Fun stuff. And all of you in DIT, I'll see you in the morning. Have a good night, everyone.